Hello and welcome to Thinkers50 at INSEAD, a collaboration between Thinkers50 and INSEAD, the business school for the world. I'm Des Dearlove, co-founder of Thinkers50, and for those of you who don't know us, Thinkers50 began life in 2001 when we published the first ever global ranking of business and management thinkers, and we've been publishing that ranking every 2 years since. In the intervening period, we've added our Distinguished Achievement Awards, which the Financial Times calls the Oscars of management thinking, our radar list of up-and-coming thinkers, and the Thinkers50 Hall of Fame. Throughout the years, INSEAD has been an ever-present and very rich talent pool for us. So in recognition of that, over the next few weeks, we are showcasing some of the world-class business thinkers from the INSEAD faculty. We want to make these sessions as interactive as possible, so please do let us know in the chat function where you're joining us from today and send over your questions at any time during the session. Today, we're shining a light on fintech. From digital wallets to loans and mortgages, fintech is a transformative force which is changing the world of money and creating a new generation of organizational stars, companies such as Stripe and Klarna. But how will it shape the future of the global economy? To help us navigate the reality and likely future impact of fintech, our guest today is Lily Fang. Lily is a professor of finance at INSEAD and holder of the AXA Chair in Financial Market Risk. She joined INSEAD in the Asia campus back in 2003 and is currently the Dean of Research and is based in the Europe campus in Fontainebleau, where she directs the INSEAD FinTech program. She's also been a visiting professor of finance at the MIT School of Management. Her recent research interest includes information flows in capital markets, intellectual property rights and innovation, as well as the economics of sustainability. Lily, welcome.
Thank you, Des. Thank you for having me.
So everyone listening to this webinar will have some idea of what fintech is or what they think it is, but I think there's a lot of confusion. So I hope you can kind of help us demystify the subject a little bit. Let's start with basics. Is there a neat definition?
So the fintech, as the name suggests, right, it's clearly a combination of finance and technology. Broadly speaking, it's trying to use technology to deliver financial services to the end of being faster, cheaper, and more accessible. So it's a combination of finance and technology, but the interesting question is which comes first, right? So because some people also use the terminology tech fin. I don't know if you have heard of it. That's referring to technology companies now actually, getting into the finance space. And so back in 1994, Bill Gates had this interesting quote. He said, we will all still need banking, but nobody will need banks anymore at some point. So that's just kind of a foreshadowing of this blurring of the line, that you have this financial services industry, which is actually now being disrupted. You can have an internal disruption where financial companies use technology to deliver their services better, faster, and cheaper. You can also have technology firms coming into the play. And therefore, there's a little bit of a confusion, and that's quite understandable.
Yeah. Okay. So I mean, people get very excited about what's going on in this space. Why is this such an exciting space right now? Why is it? How is it a game changer?
So finance industry is a fairly large industry globally. Payment, for instance, the global payment, revenue volume is about 2% of the global GDP. So there's a transaction fee in everything, all commerce that we go through. So finance is a very important industry. I think that the reason this is very exciting, there are a couple of things. First of all, from a competitive standpoint, you have this financial players as well as technology players, fighting for the market share, fighting for customers. And so when that happens, when competition happens, usually the consumer wins because you get better service, cheaper, and so forth. So from a competitive standpoint, it's important. And indeed, we're benefiting. We are getting, better, faster financial services, cheaper. And I think personally, another reason this is so exciting is because it really enlarges the pie of commerce. It has the power to enable many more people to be, folded and included in the system of commerce. So for example, one of the most well-known examples is this company called M-Pesa. I don't know if you know about it. It's in Kenya. It was set up, I think it's around maybe 2007-ish. It was started by Vodafone and Safaricom, two telecom companies, technology companies. And at that time, Kenya had 14% of the people who have a bank account. And most people obviously are not part of the financial system. Their technology allowed people to deposit and retrieve funds just all through a mobile phone, no bank accounts, no cards, no nothing needed. And this, fast forward, 15 years, directly lifted over 2 million people out of poverty because they're now part of the commerce system. And now 85% of the Kenyans are part of the formal financial system. So I think the true exciting part about this is that because of that lowering of the cost structure of delivering financial services, we can be more financially inclusive and, as I said, enlarging the pie of commerce to more people around the world.
It's you just gave me a reminder of years ago talking to C.K. Pralad just after he'd written The Fortune at the Bottom of the Pyramid and saying actually commerce can be and business can be the way out of poverty for a lot of people if we get it right. So it's great to see C.K.'s predictions coming to some extent coming true in that regard. But let's talk about the actual technologies. I mean, obviously mobile technology, you mentioned technology companies moving across, whether it was Microsoft or obviously we're seeing other players. But can you give us some idea of the range of technologies that are included under the fintech umbrella? I mean, in my mind, It's everything from blockchain to cryptocurrencies to, NFTs, everything.
Mm-hmm. Yes, there's lots of kind of buzzwords and things like that here. So I have one slide I can share with the audience. So in my view, there's 4 key technologies that's powering a lot of this development. Lots of it is actually around data. So the first part is about data collection. So first of all, we just have more sources for data, kind of the Internet of Things, the satellite images, unstructured data. Traditionally the data is a table, rows and columns. Rows are observations, columns are the attributes that we track for each observation. Now we have unstructured, data from, these new sources. So new ways of collecting data, Internet of Things, satellite, like I said, and then we need new technologies to store these unstructured data. So there's a lot of innovation. That's pure technology, which is used obviously in the fintech space. Now, the second part is also related to data. Now we have all these new sources and types of data. We also need new ways to analyze it. So these are the data analytics tools. And what comes to mind, obviously, are things like AI, machine learning, that allows us to go through, this huge amounts of data that we would otherwise not able to really analyze, kind of on a human scale. And the third part, again, it's actually related to data. Now, this is the blockchain technology. So there's a distinction between, we need to always distinguish blockchain versus cryptos, because blockchain is the underlying technology. Cryptocurrency is an application you can build on blockchains. NFTs are also an application. So the underlying blockchain technology, it's basically a different type of data, architecture. So blockchain is a very literal description of what it is. It's blocks of data chained together, distributed. Okay, so that's kind of the distributed ledger technology. And the way that this is a data architecture is that it revolutionizes or changes the way that data is governed, data is authenticated, data is protected. So, now obviously we have all of this data. There's a lot of data privacy, data security issues. And so this is a technology that could potentially be very useful, path breaking in terms of governance and authentication and protection of data. And last but not least, it's just the computing power and computing infrastructure that we have. So in this space, you have cloud computing, you have quantum computing, and you also have lots of connectivity productivity kind of APIs and applications that allow different devices and different systems to interoperate. So the issue here, the cloud and quantum technology, the core, the reason that they are important is basically they are about scalability, flexibility, and the speed at which we can process these information. So those are the four fundamental basic kind of technology spaces. When you apply them to the finance industry, there are a number of different verticals, the financial services that these are typically applied to. So one of them is payments, how money moves around, how we pay for purchases. The other is credits, lending and, loan decisions and things like that, personal as well as, business credits. And then you also have the notion of money, cryptocurrency itself, it being an application on blockchain. And then you also have investing. That's another important, financial service people need. In the investing space, you have these, AI, computer bot-powered sort of portfolio management tools, and also even to some extent high-frequency trading. That's another trading, investing technology that we have. So, and also insurance is another place where it's being disrupted, or these technologies can be used very productively in terms of improving the services there. So you have these technologies and they're applied in these different verticals. And that's, essentially the space of the fintech that we're looking at.
Now you've used the phrase disruptive several times. I mean, when we think of the traditional banking industry, I mean, the banks that are, that we grew up with, that I grew up with, very conservative organization. So can we get an idea of the significance of this disruption? What's actually taking place? Is this an evolution? Because it always felt finance and banking felt like it was a steady, evolutionary sort of business. But is this an evolution, or is this a revolution in finance happening now?
So that's a really great question. You see, Des, you're wearing a T-shirt. You look more technology. I'm in finance. I'm wearing a jacket. That's the conservative side. So, evolution versus revolution in fintech. I think actually it depends on whether you're talking about the fin part and the tech part. And that's why this is interesting and challenging, because you have two things that are moving in very different speeds, and they do somehow kind of, be together and deliver some services and improvements. So in the fin part, it really is an evolution, because the fundamental problems underlying all financial transactions, it doesn't change. It's the information problems. I'm an economist by training, so it's about asymmetric information. It's about trust. It's about, adverse selection or moral hazard issues. How do you resolve those information asymmetries? It never changes. So you always need guardrails. You always need, due diligence, know your customer, all of those things. On the other hand, the technology is just like a racing ahead. And it's revolutionary, because you can now deliver these things without at all any kind of physical interference or physical presence, right? So that's revolutionary. But at the same time, though, you have to understand, like, not all the finance problems can be completely solved by the technology solutions, because, it can help you, like with big data, with analytics and all, maybe answer some of the due diligence issues and know your customer at a scale that we never were able to do before, but it doesn't fundamentally solve the existence and the issue, the necessity of caveat emptor, due diligence and a fundamental economic and finance problem. Does that make sense? There really is an evolution, in finance. And, the more it changes, the more it doesn't change. All the same problems still occur for the same reasons, I think, in financial markets, whereas technology is moving very fast. But we need to have a healthy sort of dose of understanding that technology is not going to solve all problems. At the end of the day, you still need a judgment.
Yeah, no, I absolutely hear what you're saying about. I mean, the fundamentals probably have remained the same over, centuries, really, millennia. In terms, it's just that perhaps that some of those things can be done a bit more quickly and a bit more globally. I think we probably do need to talk a little bit about whether regulation can keep up, because that's where I guess it gets difficult, because technology is moving really fast. We've seen it with aspects of social media. We've seen it with sort of fake news and the way the information travels, and it feels as though it's outpacing the ability to regulate, or that our old regulatory institutions are not up to the job. I'll come back to that, but I just want to acknowledge that, like all new technologies, these technologies can be used for good or for ill.
Yeah.
They're not necessarily benign. Some of these, the technology, we can't blame the technology, but people using them may not be using them in gentle ways.
Yes, absolutely. So, I mean, good aspects are like the M-Pesa, like I talked about, and that we're getting better services, cheaper, always improving. And, the incumbents are being, the ones that are being disrupted, they need to self-disrupt now. They're actually trying to improve their service. That's all good. On the bad aspect of it, I think that it is true that, first of all, there are always going to be malicious players that want to commit fraud. And if that's the case, the existence of technology doesn't necessarily help. It may even aid their ability to hide and to do things. The other thing is to kind of have the false notion that technology can solve it all, or don't fully understand the implications or negative side of it. And I would just give you an example. So, for example, blockchains and cryptocurrency, right? So we were told, or supposedly, that the architecture, the open blockchain, the truly open distributed ledger, because of the way that the architecture is designed, it's like internet. Nobody can shut down internet. So this cannot be hacked. But at the same time, almost on a daily basis, we get things like, X $100 million or worth of cryptocurrency got stolen. How does that happen? So I think it's not truly understanding the implications of the technology and when it's applied by human, actors behind. So that's one thing. And also just related, on the crypto side, so you have the central bank digital currency. Many people think that this is the future of money, and that has many good things associated with it. But we need to really kind of approach this quite carefully, because depending on the design, depending on the human actors behind, depending on the governance, who gets to make decision where, who gets to see what data when, it can be pretty scary, and especially this falls into the wrong hands or people who have the wrong intents. For instance, China is racing ahead and has its central bank digital currency in, kind of the prototype stage. And if it's designed in a way that it can allow the government to have knowledge of every single transaction of every single human or, kind of citizen. And I think that kind of thing, that kind of power, that kind of ultimate, surveillance capability will give all of us a pause. So absolutely, I think that there is potential for great things and there is potential for ill.
I mean, some of these new technologies, you mentioned the cryptocurrencies, which is an obvious one to think about, but they do have a kind of a, we've been here before. It feels a bit like the gold rush. It's people think they can get rich quickly. It all feels a bit too easy. Obviously, as you mentioned as well, information does tend to be asymmetric, which favors some people over others. So things can go wrong for investors and hurt them. I mean, what? Because there'll be people, I'm sure, listening to us, thinking maybe they should be investing in cryptocurrencies. I certainly have friends who don't really know a lot about it, but they're buying cryptocurrencies. What sort of? I guess it's buyer beware as ever. But if you've got any advice for those people,
yeah, it's absolutely true. I think that every single time when there's some kind of technology evolution, leap, there's always naturally lots of enthusiasm, maybe a little bit of a, exuberance or irrational exuberance. It's natural, and that's why society, then you have bubbles and crashes, and you have kind of, we evolve in this kind of bumpy fashion. We progress in that way. The issue is that I think when it gets into a hype and when all kinds of actors start to kind of promote them, and nowadays, because of social media, everybody gets access to a platform and they can talk about things and they can influence. We have a class of people who are professional influencers, and they can make people not knowledgeable of certain things feel like, I should be in part of the game. And that's when really things can go wrong. I mean, I saw this really interesting piece of data. I think it's from Bank of England that showed that obviously we know last year a lot more people got into cryptocurrency trading, investing. they did a survey basically asking people a number of very basic questions about cryptocurrency, just some basic kind of definitional or just basic questions. They got fewer people, a smaller percentage of respondents able to answer some of those questions correctly compared to 5 years ago. And yet a whole lot more people are actually doing this investing. Clearly, this just means that more people thought that now it's the time for me to jump on the bandwagon. So it just as always, as I said, the issues in financial market, when we quite often hear, this time is different. It usually is not. When you have too much of exuberance in the market, usually, especially if you don't know a lot about this space, you should give you some pause, do some study, understand it before you kind of just jump in.
Yeah, and I'm always reminded at these moments of the famous investor George Soros was asked at one point, what was obviously he made millions and millions on currency speculation, but he was asked what the secret of his success was, and he said, "I always sell too soon."
Uh-huh.
But at the point where the exuberance is coming in, that's when he was getting out.
Right.
It's just timing it. Knowing when
Yeah.
it's time to get out as well.
And so Warren Buffett similarly had said that you should, so basically being contrarian. So you want to be greedy when others are fearful and fearful when others are greedy. So
yeah, no, that's good. Mm-hmm. Kind of brings us to kind of the moral and ethical dimension in all of this. I'm not sure that since 2008 and 2009, I'm not sure that we particularly associate moral stands with the banking system, but perhaps that's being a bit unfair. Mm-hmm. But what are the ethics around fintech in terms of its purpose within society and also regulation? Because, as we said, regulation comes into this.
Yeah. So, it sounds like it's a very good question. It sounds quite complex and difficult to attack, difficult to get a handle on. Although I think that we can get a better handle on this if we go back to the basic notion that fintech is basically trying to use technology to deliver a set of financial services. So the ethics and the guidelines should be the same as the traditional finance industry. Why should it be different? Just because the delivery mode is different doesn't mean that the basic ethics and purpose is different there. So I do think that and the difficulty is that you see the traditional financial industry, much part of it, insurance, banking, it's regulated. They have this very strict regulation in much parts of the world. But then technology, companies, a sector is not regulated. So when you have technology companies coming into this, then that creates almost a regulatory arbitrage. And I think that this is, at some point, is going to hurt this development of this industry. I think regulatory symmetry, closing that loophole of possible regulatory arbitrage is going to be helpful, because it just leaves, instead of being in a limbo. I think for that reason, and you very aptly brought up this analogy of, say, social media and this big tech companies, it's the same thing. And in fact, Facebook was saying, look, then do some, because to get a self-regulated entity, a for-profit business to self-regulate, it's very difficult to do. So I think that it's a very good question, but if we actually come back to the notion that fintech is, financial services, then the regulatory question should be clear. And we are obviously behind. The difficulty is understanding how the technology interacts with the ability to regulate, but the need for regulation and clarity, I think that absolutely is needed to be there.
I'm pleased to see we're joined by people. We've got people from Perth, from Beirut, Bangalore, Dubai. So we've got a very global audience. We've got a question. I do encourage people to. You've got an opportunity. We've got Lily for another little while yet, another 20 minutes. So please do send in your questions. There's a question here from Jaro. I hope I pronounced the name correctly. Why banks and regulators are not moving so? Why are banks and regulators not moving so fast as technology fintechs? What stops them from collaborating with the main fintechs?
So regulation is just by definition slow. They need to study, they need to consult. All of that And I think that the technology evolves so fast. And then there may be also interest groups lobbying against regulation. I think that that's what, interests that are preventing from this. But I think that things are moving, because in a number of jurisdictions, for example, mobile banking or pure online banking, you do need to have a banking license. So then it puts, the same kind of regulatory requirement as to the regular type of banks. So I think that it is converging. It's just perhaps not quite as fast as we wish it to be.
Okay. I mean,
government bureaucracy.
Yeah. No, well, it's almost, as you say, by definition, regulations and regulators tend to move slowly, and almost by definition, technology companies and technology innovation tends to move very rapidly. So it's a kind of a mismatch in this, which is interesting, I think. We touched on earlier the kind of the overlap between things like social media and fintech. Obviously, you've got people like, and I don't want to get too much into the detail because there are law cases going on, but people like Elon Musk, who are famous technologists, but promoting cryptocurrencies to a certain extent. We don't know what the outcome of that's going to be, but that's another phenomenon here we see is that people are able to use their influence to talk up cryptocurrencies and non-fungible tokens as well.
Yeah, I really find that a very puzzling thing. And when Elon Musk first said, not only just personally tweeting about it, I can see that Elon Musk, obviously, he's a technologist. He even wants to brand himself as a geek. He's into technology, so I can see that he's genuinely excited about the blockchain technology and the cryptocurrency as a new notion of money. But as a public actor, as a person who has huge market influence, to talk about it, not only in his personal tweeting account, which is already borderline, then on the Tesla's corporate account, basically investing in this as an endorsement, I find that very problematic, because number one, he has market moving power. And I think that that's why he rubs, against SEC. There's a number of investigations looking into his communications and so forth. And for him, the Tesla company to invest in crypto itself, or Bitcoin specifically, is absolute oxymoron, because Tesla is the largest EV. It's for the environment. It's about energy, clean, and everything. But cryptocurrency mining, especially Bitcoin mining, is the dirtiest industry in the world, the most wasteful, energy wasteful. Lots of the energy is essentially powered by coal. So it really is a very self-defeating. I called this out when it first came out. And I'm glad that they retreated. I mean, they basically divested from the Bitcoin. But I just think that, from a individual responsibility point of view, he really shouldn't be doing this. But I mean, again, Elon Musk does many things, he does what he likes. So I think that, and this comes back to a point we talked about earlier, which is that lots of people have influencing power. And so it's kind of, the onus is also on the audience and on the listener. I mean, you can, how much do you want to be influenced? You want to use your own judgment and analysis to think about this, rather than just being influenced by your famous person, by your favorite celebrity. I think that we always need to think from using our own judgment.
No, that's a good point. That there is somewhat of a paradox in terms of an individual who's promoting at one hand the sort of sustainability and then also promoting, it's very interesting. There's also the kind of the individual players, because the other thing that these technologies have allowed is for individuals, day traders, people to deal in currencies, in cryptocurrencies, but also in stocks and shares. Some of those people, I mean, I was following some of the articles that you've contributed to, and there's some people who have sort of given up the day job, and they potentially can be made they can lose everything. It's not as easy as it looks, this day trading lark.
I think that this gets a bit back to the broader idea of sort of the good and bad double-edged sword nature of fintech. There's lots of good things about it. It equalizes, it gives access, people who were you see, wealth creation, we need to take risks. We have in our portfolio, we need to have some equity in our portfolio to long-term create value stocks for the long run and stuff. And lots of younger people probably weren't able to participate in the wealth creation, let's say in the public stock market and stuff. So this lowers the bar. But so that's a possibly good thing. But there's also sort of an insidious dark side about this, which is that a lot of the promoters, innovators, would have this tendency to make things look too easy, or gamify things and make it look very cheap, super cheap and easy. So, Robinhood, which encouraged lots of retail investors with no experience whatsoever to get in, because the attraction is that you get zero commission, trading is free, trading is fun, trading is so easy. You a few clicks on your mobile phone and you're in the game. So it's almost gamifying this thing, but understating the fact that when you buy stocks and bonds, let alone cryptocurrencies, let alone derivatives, options and derivatives, it's very risky undertaking. You should not be doing this sort of just as a game, and zero commission. In fact, it's still too high because the way that Robinhood, what's the incentive here? Robinhood makes money. They don't charge you, the trader, the commission, but they're selling all your data, your trading data, aggregated to players such as Citadel, hedge funds, and they make hundreds of millions of dollars from that. So just like Facebook and social media, right? You have an account, but your data is being sold to advertisers. So in this case, they should pay you to trade on their platform. And so instead they're saying zero trading, make it super easy. And I think that it lured a lot of people into this, and especially making them overestimate their ability to do this. And then, in the end, it's the small investors that could be seriously hurt.
Yeah, we saw instances of this with the last year in particular. But
yes,
where influencers are able to cause people to buy shares that perhaps wouldn't otherwise be attractive.
Yeah.
I always, again, obviously, INSEAD, there's lots. You've got your very bright MBAs, and I always think MBAs in particular, but all of us really should always ask that question: what is the business model of this organization that I'm interacting with? It's like Facebook. Okay, this is great. It's all free. Yeah. But of course, there is a business model. And once you understand what the business model is, you've got a pretty good idea of whether you want to participate in that and be part of that, because they are using and reselling our data. And that's something that. So I wish people would ask themselves that question before they leap in sometimes, just to understand.
Absolutely.
And the same thing applies with Robinhood. So it's the same thing. Let's just see if we've got a couple of questions coming in, I hope. Got a question here. What is Lily's opinion to mitigate the catastrophic impacts of cryptocurrency and blockchain technology in the near future, just as the establishment of the Basel Committee in 2009?
You see, so one thing is this, right? Cryptocurrency, by definition, this is a decentralized system. It is by design, kind of a ground up thing. It's a peer-to-peer system of money. Bitcoin is supposed to peer-to-peer. So it's not like it can be shut down by the government. It's just like the internet. It's not a government. So it is absolutely designed to be outside of the mainstream system. And no individual, no entity is controlling this. It's a peer-to-peer global and constant 24/7, always on system. And so I think that, again, this is a decentralization at the max. So catastrophic, so in a sense, I don't think that this is ever going to be like a systemic risk, in a sense that, first of all, compared to the actual monetary system, this is very, very small. And second of all, again, this is a decentralized, every individual, it's your individual responsibility. You lose your money, unfortunately, that's too bad. It's not. And then these are identities are supposed to be, anonymous. So you're not, so I think that people have to absolutely understand that there's no backstopping, government behind that, either bail out or backstop a crisis. So this is absolutely your own responsibility, how much you want to get in. Lots of, last year, it was, we know that, what's her name, Cathie Wood, the ARK ETF, and some of the people who used to kind of say things against crypto, when things are in the exuberant phase, they start to say, oh yeah, maybe we should go in. But when they go in, it's not like they're putting 100% of their money go in. People always hedge a little bit. They use this as, it's a form of FOMO. Like people was like, in case, fear of missing out, okay? In case this is actually going to be hitting big, in case I lose out, I will put a little bit of money. Nobody, Ray Dalio was very critical of crypto, but at some point he's actually becoming supportive, and but he's never putting in 100%. It's like maybe 5% of your portfolio. So again, here we need to understand that it's individual responsibility, caveat emptor reigns high here.
Yeah. I've got another question for you. Sudipto Roy asks, are there different attitudes to fintech in different parts of the world? Why reasons for acceptance of digital payments more in Asian countries like India and China compared to the US and Europe? Do you see different different approaches and perhaps different attitudes in different parts of the world?
Yes, so absolutely, very good question and very accurate observation. In Asia and Europe, in fact, it's faster moving ahead and giving consumer the value, than the US. And one of this is legacy issue. The US is a very credit card dominated society, and the fees charged by the credit card system, the two main players, Visa and MasterCard, is very high. Part of that is justified, but it depends on how much, right? I mean, how much is justified? It's because credit card is a different thing. It involves extending a credit for a period of time. So they need to do the credit check, like whether you're a player. Whereas, direct debit transactions, it takes money out from bank account when you have it. So as long as you get the wiring to be instantaneous enough, you are not extending credit. There's no sort of credit extension, credit checking function there. So that's much cheaper. And so I think that, and also Europe, actually the difference is that Europe is just regulated to say like credit card, fine, you can charge higher fees, but no more than, 0.8%, whereas in the US it's 3%. But I have to also say that this is where, despite this, disruption by fintech, it's not helped. You might think that PayPal, Square, all of these new guys coming in is lowering the fee, but just go to their website. They would disclose to you if you paying by PayPal or Square, to the merchant still gets charged the 3%, same fees, just like credit card. Because at the end of the day, the fintech, they're essentially helping the connection, the connectivity of the buyer, the of the payer and the payee. But in the end, there's still some kind of interbank connection that need to happen. So that, again, this is where technology didn't solve the fundamental problem. They're still charging the same fee. In fact, in PayPal and Square's case, the fee is very high. It's even possibly higher than just the credit card direct payment.
Okay, we've talked a little bit about the dark side of all this and about the negative, but I'd like to believe there's also an upside to all this. Can fintech be a force for good? I mean, can you give us some examples of the good side of some of these evolutions and these disruptions?
So as I said, one of the really great things is about inclusion. This Kenya's example of M-Pesa. Another one of my personal favorite is in the insurance space. Actually, it's InsurTech. It is using the blockchain technology. So we've talked about lots of kind of, crypto seems to be harmful or potentially harmful for people. And this is another application of the blockchain technology, which is absolutely, I think it's just so amazing. So this is called parametric insurance. It's a fancy name. So insurance is a simple contract. And so therefore, you can use a smart contract feature of blockchain to deliver insurance contracts. And so the idea is this. So think about a micro farmer, subsistence farmer in some remote area in, say Indonesia or, Philippines. He wants flood or drought insurance. And the typical policy would say after 20 days of nonstop rain, you would get a payout because that will wipe out your, harvest. Or after a whole month of drought, you get that. But previously, no insurance company would have the cost structure low enough to be willing to, underwrite this insurance for a micro farmer. Now, with the smart contract, you don't need agents, you don't need branches. You can have this smart contracts verified and delivered. And the execution and payment of the contract is automatic. And the triggering condition, that's why this is called parametric. It depends on certain weather parameter. It's objectively verifiable. Nobody can fudge that. And once that condition is met, the smart contract automatically executes itself and the farmer gets paid. So this is absolutely already in place. Insurance companies such as AXA that I work with, they already have these type of things. And it's absolutely life-changing for these farmers because they will just allow them to manage the risks better, to be able to do more with the limited amount of capital that they have. So these are the really exciting things that I think that a positive side that gets me totally excited about fintech.
Okay. Do you get excited about NFTs? I'm still not sure I've fully grasped what they are.
This is absolutely my personal thing, so I would say not. So, NFTs, you see, the crypto for the most part, it's not a currency. It could be an asset, but understand any asset could be also a toxic asset. If you have the descriptor toxic asset, being an asset doesn't mean it has value. So what is the intrinsic value of this NFT is I still don't know exactly what is the intrinsic value. And so therefore, it's very important. I think that currently still the value depends on what the market, what the next buyer says it is. So therefore, it's a very subjective market. So, so you have to make your own judgment on that.
Okay. We have another question from. We're running out of time, folks. So if you've got a question for Lily, please do put it up in the chat box. We've got a question from Timur, who is who's got a couple of points here, but talking about compromised data security. We've seen this where people's credit details and people's bank accounts can be leaked. Where we're only as good as their security system, and the hackers are out there. But I mean, to some extent, we don't really have much choice in the matter. We have to deal with digital banking at some level, because otherwise, I guess we're going to be left behind.
Or put things under the mattress.
Exactly.
That you can still, yeah.
But there is that risk, and I mean, how real are those risks, and are there measures that people can take to protect them?
That's why I think that the cybersecurity industry is absolutely a booming industry. It's like you can pick try to pick winners of things, but you can also pick just the shovel makers and the tools makers. I mean, I think that this is going to be the industry. So I think this is going to be an aspect. We are now dealing lots of business models run on the cloud. Now, firms that provide security features to the cloud companies, that is going to be a booming industry. So this is going to be a part and parcel of the fact of life, I think. And therefore, there will be interesting opportunities in that space, I think.
As you say, I mean, the ones that made the money in the gold rush were the makers of shovels and the people that sold the shovels.
That's right.
Yeah.
The picks and shovels sellers,
yeah,
right? Exactly.
Absolutely.
Yeah.
Finally, I mean, it's been a fascinating kind of walk around all this stuff. But what are some of the points that managers who are listening to this and people of all ages, really, and from all over the world, should take away from this session? I mean, to be part of the future of fintech, because we want to be part of it, I think, but we don't want to be mugged, whatever form that takes. We want to benefit from the opportunities. I think we want to be alive to the opportunities.
Yeah.
I mean, it's one thing to simply say, I don't believe in cryptocurrencies. That's short-sighted as well. But what can people do to avoid the worst sort of excesses and exuberances to protect themselves?
So I think, I resonate with some of the things that you said there. So I think, first of all, as individual investors or consumers, and as well as business, managers, if you're in this space thinking about it's always very important to keep front and center. What is this business or this service? What is the problem that is trying to solve? Is it a real problem that needed solving? So basically, is this a real market? Does it really have a purpose, So I think that, kind of what problem this is solving, what is the incentives behind this offering of this? Are they trying to increase their sales volume in some way, or are they trying to truly improve something? And I think that when you put that question front and center, understand the purpose of the business. Does it really solving a real problem, a necessary problem? You would always come to a good position, either that you're just a personal user, consumer, to understand, oh yeah, that is a real problem. This is a good solution for that. Or you are actually in the finance industry and thinking about, investing or getting into some of the space. There are excessive innovations, there's some kind of useless ones. And you should ask yourself, what is the question we're trying to solve? And is this the right way to solving it? And there, with those questions in front and center, I think that you would generally end up, with a good proposition regarding any kind of situation.
Okay, and fantastic. And obviously, keep up to date with everything, all your research. Where can people go to find out more about what you're working on at the moment? What you're publishing.
Great, thank you. So, INSEAD website, just Lily Fang, you can find me at INSEAD website. At INSEAD, we also have, as you mentioned, I run the program on FinTech. It's a 5-week online program. We do have live interactions with the participants there as well. So it's a fast evolving, very exciting, a field, and I'm constantly learning about this as well. I'm also on LinkedIn, obviously, so very much welcoming people to connect and share insights with me.
Fantastic. Well, I'm afraid we're out of time. That was really interesting. I learned a lot talking to you. So I mean, it's nice to meet somebody who can explain complicated things, in a way that we can all understand. So thank you for that. Our guest next week will be Claudia Zeisberger. Claudia is Professor of Entrepreneurship and Family Enterprise at INSEAD and the founder and academic co-director of the school's Private Equity and Venture Capital Centre. So that will be on Thursday, the 29th of September at 2 p.m. UK time. The session is entitled Adventures in Private Capital. Please join us then. Thank you again, Lily, and thank you to everybody who's tuned in.
Thank you, Des.